Stacey, welcome. We know you've had an underperform on Intel for a while now. I think you still have a $40 price target on the stock. Yes. Maybe this doesn't knock your socks off, but is it at least a move in the right direction?
Well, look, they need something like this. So they're trying to build out a foundry business. It is a critical piece of their longer-term strategy. They don't have a lot of the pieces that they need, especially on some of the older generation technologies, specialty, analog, that sort of thing. This is something that they needed. It would be prohibitive for them to develop it internally, so they do need to probably acquire it. Now, they were rumored to have been looking at Global Foundries in the middle of last year. Global Foundries would have given them that, and Global Foundries was also much, much bigger. That didn't work out for whatever reason, so they kind of had to go down market, and they're buying Tower. Tower will give them some of those capabilities, but it is much, much smaller. Tower's got about 1% market share in the foundry industry. They've got very low margins. It's about 20% gross margins. They're actually higher than they've been over the last several years at 20%. It's not a super business, but it will give them some of those capabilities that it'd be unlikely that they could have any success in the foundry business without those. So they need them.
Yeah. So, again, as part of a foundry business, as a turnaround strategy, they're clearly not going to remake the company with a $5.5 billion deal.
No, it's a rounding error. Like let's be honest. That's the scale of things that we're talking about.
Yeah. So what would you like to see them do that would maybe be a lot costlier than a rounding error?
Well, I mean, it's not that. Like Global probably would have been a bigger push. Global Foundries had about 7 or 8% market share. Again, they don't really have a lot of choice in the foundry industry if that's where they're going. Because you think about the rest of the folks. TSMC and Samsung are no-goes. They can't buy those. Glofo, it sounds like they tried. That didn't work. UMC and PowerChip are Taiwanese. SMIC is Chinese. Those aren't going to work. The next one in line is Tower. Like that's it, right? So they don't have a lot of choice. And in some sense, it shows you the position that they're in, that if they're going to go out and acquire these capabilities, this is the asset that they have to buy. They don't really have any other choice.
Yeah. So Tower obviously surging on this deal. There's more maybe that is going to be coming down in the pipeline for Intel. What's next, do you think?
Well, they have their analyst day on Thursday, so that's going to be interesting. At this point, they've kind of given us a flavor for what the strategy is going to be, although that flavor itself has been kind of sour. We're seeing gross margins coming down. We're seeing CapEx ballooning. We're seeing free cash flow effectively vanish. What we still do not know is what is a good picture? What does this company actually look like in 3 years, 4 years, 5 years? What is the shape of the bathtub they're probably going to have to go through during the transition? Where is the trough? How deep is it? None of this is known yet. And those are answers we're hopefully going to get on Thursday, and we'll see what they say. But my guess is that is going to be an eventful day, like one way or the other.
I think
that's the next thing we're waiting for.
And it's well taken. I think of Patrick Moorhead, who is not on the sell side anymore, but is a fan of Intel for the longer run. He sees that this is a turnaround plan, but thinks this needs to happen. They're going to figure it out. If you were able to think on more of a 3 to 5 year horizon, would you be much more bullish and excited about what they're doing here, or would you still think they're going in the wrong direction?
Well, look, I don't think they're going in the wrong direction in the sense that if they want to have any kind of hope of having a robust, viable company 5 years, 10 years down the line, they're doing what needs to be done. And Pat Gelsinger, to his credit, is showing an awareness of this. He's blowing up the model to try to save it. Now, that doesn't mean I want to hold his hand while he's doing it. And there's no guarantee that it's going to work. But what's the alternative? The alternative is to lay down and die.
Right.
Right? That is not what he was brought in there to do. He was not brought in there to sort of like manage like a long and steady terminal decline. He was brought in to try to bring it back to his former glory. They're doing what they need to do to even have a hope to do that. But it's certainly not a guarantee. I mean, call me in 5 years. Like, we'll see.